Hi there. In this week's Equity Focus, we're looking at the performance of shares that see the highest demand to borrow from short sellers. Now, the way we gauge this demand to borrow is we look at a Markit Securities Finance proprietary metric called utilization. Now, utilization is essentially the proportion of shares in lending program currently being borrowed by short sellers. And as utilization rate increases, the demand to borrow by short sellers does as well. Now, it's an interesting metric because if you look at it, the short interest does tend to tell you the negative sentiment, but sometimes we might have a situation where a certain security is not necessarily widely held by institutions that tend to lend their shares. So therefore, a company might have low aggregate short interest, but still see a very high utilization metric, which is this kind of demand to borrow ratio. So if we look at the proportion of shares, the shares with the 10% highest utilization and how they perform over time, what we found is that the 10% of US small cap shares with the highest utilization have underperformed the market by 70% over the last 5 years cumulatively. Now, this is quite a significant metric, and it's also a very consistent one. So if we look at the fact that the shares with the 10% highest utilization underperform the market 3 months out of 4, which is quite a consistent factor over time. Now, this doesn't necessarily translate into large cap shares because they tend to be more widely held. So therefore, short sellers may have a greater pool to borrow. So therefore, utilization gets a bit lost in some of the the more widely held names. So for example, S&P 500 constituents. So that's it for this week. If you want to read the report in a bit more details, we strongly encourage you to go to the commentary section of the Markit website. Thank you very much and have a nice week.